Imagine rolling out of bed, grabbing your morning coffee, and opening your Kaspa wallet to check on your balance. And suddenly, you see it. Your 13,500 KAS has shot up overnight into unfamiliar territory. That $1,400 bet you placed when KAS was under 10 cents has blossomed into a four-figure sum. Do you take profits now, hold on tight for an even bigger run, or regret not scooping up twice as much? If you've ever asked yourself, what could 13,500 Kaspa be worth by the end of 2026? You're in exactly the right place. By the way, if you want to trade crypto, I use WEEX, deep liquidity, low fees, and a massive coin selection. You can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Hit the link in the description, deposit, start trading, and grab your bonus. No KYC required. KAS sits right around $0.105. That makes your 13,500 token stack worth about $1,417. But price alone doesn't explain why Kaspa could soar in the months ahead. Its real magic lies in a unique block DAG design and ironclad proof-of-work security. Kaspa processes blocks in parallel, achieves finality under 10 seconds, and sustains throughput of hundreds of transactions per second, all without orphaning blocks or sacrificing decentralization. Under the hood, Kaspa's Ghost DAG protocol lets parallel blocks coexist, then orders them into a secure ledger. Traditional chains throw out simultaneous blocks as orphans, but Kaspa keeps them all, turning potential conflicts into increased throughput and resilience. For enterprise users, sub-10-second confirmations feel instantaneous. For everyday traders, it means near-zero wait times and fees that stay under a penny. Security comes courtesy of brutal hashrate. Recently, Kaspa's network climbed past 900 petahashes per second, higher than many established proof-of-work blockchains. A 51% attack would demand hundreds of millions of dollars in hardware and electricity, making malicious takeovers effectively impossible. Meanwhile, node requirements remain modest. You can run a full node on a basic home setup, preserving true decentralization even as the network scales. In early 2025, Kaspa's community rolled out the POA2 upgrade, blending Byzantine fault tolerance with Nakamoto consensus. That hybrid approach bolstered security even further, while preserving Kaspa's lightning-fast block times and minimal fees. Shortly after, major exchanges launched community staking programs, letting KS holders lock tokens for extra yield, mirroring transaction fee burn, and giving long-term believers another incentive to HODL. Developer tooling has matured in parallel. New SDKs for JavaScript and Python make writing smart contracts and custom transaction logic far easier. Enhanced blockchain explorers now reveal real-time analytics on block DAG structures, miner distribution, and transaction graphs, vital data for devs and institutions. Community-built dApps, from decentralized exchanges to micropayment streaming platforms, showcase Kaspa's evolving role as a true Web3 platform. Real-world usage is no longer theory. Last quarter, a luxury automotive marketplace began accepting KAS for high-end vehicle purchases, proof that the network can handle serious dollar amounts with ease. In Southeast Asia, a remittance pilot cut transfer costs by up to 40% compared to legacy rails, thanks to sub-cent fees and instant settlement. Supply chain consortiums are testing Kaspa's finality guarantees to tokenize provenance data, tracking goods from factory to storefront with unparalleled transparency. On-chain metrics back this growth. Daily transaction counts have more than doubled over 6 months, rising from a few 100,000 to over 1 million. Active addresses now outpace dormant ones by about 2 to 1. Developer contributions on GitHub have surged, and hackathons and meetups attract hundreds of participants. These trends signal genuine network utility, the kind of bedrock that supports higher token valuations. Turning to supply, Kaspa caps at 28.7 billion tokens, with just over 26 billion circulating today. Issuance follows a smooth, gradually declining block reward schedule rather than abrupt halvings. That steady taper keeps miners incentivized while slowing inflation, an approach that helps investors model long-term supply pressure accurately. On the macro front, proof of work is regaining regulatory respect. Major jurisdictions have moved toward clear energy use standards rather than outright bans. Kaspa's efficient ASIC mining setup positions it as a greener POW alternative. Meanwhile, institutional interest in decentralized infrastructure grows, and Kaspa's combination of security, performance, and utility puts it on many radars. So what do the forecasts predict? Data-driven models paint a range of outcomes. In a conservative scenario, Enterprise pilots expand steadily, but without blockbuster headlines, regulatory clarity remains mixed, and broader sentiment drifts. The price could drift to about 15 cents by late 2026. That would value your 13,500 KAS at $2,025, a 43% gain over today's $1,417. A solid, low-risk return. In a realistic growth scenario, staking locks up supply, POA2 drives new contracts, and smart contract tools unleash fresh dApps. Kaspa could rise to 30 cents. That puts your stack at $4,050, nearly triple your initial outlay. Those returns mirror typical mid-cycle altcoin rallies fueled by real use case momentum. In a full-blown bullish moonshot scenario, Kaspa secures flagship partnerships across supply chain, finance, and gaming. DeFi adapters flourish, global remittance adoption spikes, and a major crypto rally takes hold. KAS could break above 60 cents or even 80 cents. Your 13,500 tokens would then be worth between $8,100 and $10,800, a 470–660% return. Life-changing gains if you can ride out the volatility. No reward comes without risk. Kaspa's future hinges on sustained miner and developer support, enterprise rollout of real-world use cases, and favorable treatment of POW networks by regulators. Competing DAG or Layer 2 solutions may capture developer mindshare. Macro downturns or security incidents could pull KAS back near its sub-10-cent lows. Even a single protocol bug could spook the market. Yet Kaspa's resilience is clear. After peaking near $0.2075 in August 2024, it fell below 6 cents in early 2025, then rebounded sharply on enterprise news. That cycle proved that real adoption stories, not just hype, fuel sustainable value. With planned forks next year introducing subnetworks and advanced smart contract layers, Kaspa seems poised for its next growth phase. So, what's the take-home for your 13,500 KAS? Aiming for the conservative $2,025 outcome gives you reliable returns. Targeting the realistic $4,050 mark could triple your stake. And if you believe in Kaspa's block DAG revolution and broader bull markets, shooting for the $8,100, $10,800 zone could turn a modest investment into something truly monumental, if you can stomach the swings. Now, it's over to you. Drop a comment. Which scenario speaks to your strategy? Are you playing it safe, riding the mid-cycle wave, or all in on the moonshot? Which catalysts, protocol upgrades, enterprise deals, or market tides will drive Kaspa's next surge? If this deep dive helped you, hit like, subscribe for more crypto analysis, and ring the bell so you never miss a forecast. Here's to making informed decisions and smart moves in the Kaspa ecosystem. See you in the next one.